Welcome to all of you in my class, that is Kundu sir class. And as requested, I am starting today the accounts of 11th class related to accounts, but it is basically fundamental class for learning the debit and credit rule. So in the right hand side, there is a transaction is written and you are requested journalize the following transaction in the books of Rumjhum, because owner of the business is Rumjhum. She started a business with a cash rupees 15 lakhs and make transaction whole the month of July. So before passing journal, we have to learn the rule of determining debit and credit. All transactions, there is a debit side and credit side, but there is a rule. If we know, then it will be very easy to learn or to do journal. So first of all, I will write here, I am going to write here the golden rule, and the rule is related to determining the debit and credit transaction. First I am writing here the determination or determining the debit, that is DR, and credit related to transaction. So debit and credit and accounts all are integral part of accountancy. So we are taking a basket in which some accounts are kept. So that is, it is accounts. Then first of all, we are going to classify the accounts under two broad heads. So we are bifurcating the accounts. One is bifurcating the accounts. One is personal account. Personal account, usually accounts also related as accounts or accounts. So one is personal account, another is impersonal account. Impersonal account. Now personal account, we are not going to divide again, but impersonal account now again classified under the head real account or accounts, and nominal accounts or nominal accounts. Now we are going to discuss about the debit and credit. If any transaction, because event is not related with a monetary terms or cannot be monetary terms or equivalent of monetary terms, so all transactions are always we can convert into monetary transaction. That is, it may be converted into monetary terms. That is, transaction is to be recorded in the journal. All are event, but all events are not transactions. Some events, those are transaction, that is a monetary involvement. It may be money, bank, cash, or the transaction we convert into money or convertible into money or in monetary terms, those events are called transactions. That is, we are making a conclusion, all transactions are event, but all events are not transaction. If events can be expressed in monetary terms, then it will be termed as transactions. So, transaction we can do with some in person, that is in personal account. It may be related to real accounts or nominal accounts. Now, for debit and credit, now personal account, I am writing the thumb rule or golden rule. Golden rule, it is called golden rule. Golden rules. It is termed as most important thing. Golden rule, it is in the topics, it is written, and now I determining, or we are determining which one will be debited, which one will be credited. In case of personal account, who is the person? Maybe what are the person? I will write here the name of the person. I will give some example. First, we should write what, that means receiver. For the personal account, receiver to be debited. That means receiver will be debited, and giver, receiver will be debited in accounts, and giver will be credited, to be credited, to be credited. For personal account, receiver debited and giver will be credited. So, when receiver is debited, we are giving some money to Shreya. We are giving money to Shreya. So, Shreya is getting money from you. In your book, Shreya account will be Shreya account to be debited and cash account will be credited. This portion now I will discuss in the impersonal account under the head real account. That means the Shreya is the receiver, Shreya account is debited to cash. That means paid to Shreya, within bracket cash. Now, you are receiving money from Srija, your cash or cash received from Srija. That means you are receiving cash, then cash account will be debited or to be debited. Shreya is the giver. Shreya is the giver. Shreya will be credited of amount some rupees. It may be 1,000 for Shreya, for 1,000, and for Srija we have given cash to Srija rupees 2,000. So we are received cash from Srija 2,000, so our cash account is to be debited and Srija account is to be credited. That means personal account, receiver debit and giver credit. Now, impersonal account is classified real account and nominal account. For determining debit and credit under golden rule, then we are writing the thumb rule or golden rule, that is what comes in is to be debited and what goes out to be credited. Now we are combining the personal account and real account. That means first case, paid to Shreya cash 1,000. The Shreya is the receiver and cash goes out from us. the cash is credit. That means Shreya is the receiver, it is a personal account, we are giving cash to Shreya. It is a real account, and the real account what goes out is to be credited. So first entry, Shreya account debit to cash account. And now another entry, cash received from Srija. So we are receiving cash. So what comes in debit? It is a real account one part. Then cash account debit. And who is the giver? Srija is giver here. So Shreya account credit. So in the real account, the rules is what comes in debit and what goes out credit. Now I am giving here example for personal account. Personal account here. One. I am giving a lot of example. Shreya is a personal account, Shreya's account. Personal account, then Srija. Srija account, then Ram. Ram's account, Srija's account, Ram's account, X limited accounts also example of personal account. X limited also companies to be treated as this under this head, that is personal. Then when we are giving some money to X limited, entry will be X limited account debit, and we are giving cash. Cash account will be credited. If we pay X, then X limited account will be debited to cash account. Here Shreya, Ram, Srija, X limited, etc. are the example of personal account. They may be receiver or giver. If they receiver, they will be debited, and if they giver, they will be credited. Now another part I am doing here, this is equal to the real account. I have given example and explanation everything. Now we are doing real account or giving some example or explanation account, real account. Now in case of real account, we are purchasing a machinery. The machinery, that means real means the account which are to be maintained years after years, that is real. Then personal account, if there is a balance, it may be debit or credit, is to be maintained, the accounts to be maintained year to year. But in case of nominal account, it is not to be maintained. At the end of the year, the account is to be closed and it will be transferred to respective either PL account or manufacturing account or trading account or PL account, wherever is suitable, and day to day I will explain this. Now therefore real account, machinery purchased by cash, machinery purchased by cash for rupees 1,50,000. So what will be the entry? We are getting machinery. What comes in real account? Machinery is a real item. So machinery account will be debited. Machinery account will be debited or is to be debited, and cash is goes out to cash account. To cash account 1,50,000. 1,50,000 debit because it is a real account. What comes in? We are getting machine and we are making payment and we are giving payment, that means cash goes out. So cash will be credited 1,50,000. Second thing, we are taking another example, machine. Now we are purchasing a building for the business. So then we are getting building. So next example, I am writing 1, we are writing 2 for explaining the real account, building. building, purchase or office building purchased for rupees 50 lakhs by and payment made by check. You can write office building because we are maintaining account for office, not for the personal account here. So, when as and when we are purchasing machine, so what will be the entry? Entry number 2 to explain the real account. We are getting building. What comes in? Building. So, building account is to be debited. Building account is to be debited by rupees what? 50 lakhs. You are incurring expenditure to purchase office building. The building account debit rupees 50,000 and we are making from payment from our bank account, but that is the office bank account to bank. That is 50,000. Now I am explaining with the help of the golden rule. When we are getting machine, what comes in? Machine we are getting. So machinery account debit. And cash goes out. That means we are making payment 1,50,000. The cash goes out. Here machine also or machinery also real account and cash also real account. Next, we are purchasing building for office for rupees 50 lakhs. So what will be the entry? That means what comes in? We are getting building. It is a real account because account of building is to be maintained by the office years after years, because real account is to be maintained years after years. And in case of personal account, if there is a balance, it may be debit or credit of the end of the year is to be maintained in the next year, then next to next year also if it is needed. So real account is to be maintained. So what will be the entry? Building account debit to bank account. Both accounts are real account. Now then real account I have explained here. Rules is what comes in debit, was got out credit. For there two example is given. Now I am removing this part for explain the nominal account. Nominal issues, nominal account are not maintained years after years. At the end of the respective year, nominal account is to be closed and this account may be open, reopen in the next financial year as a new account. That means accounting, accounts or account is maintained in the new year but not carrying any balance or related to the last year. First of all, I will mention here the thumb rule or golden rule for determining debit and credit. So what is the rule for this? I am explaining here. What is the rule for nominal account for determining debit and credit? And it will be started from the recording of the journal, because all transactions those are recorded in the journal. Thereafter we should prepare the ledger, then trial balance, then manufacturing, trading and final account and balance sheet, so on. Our first target is to learn the journal for the nominal account. Expenses and loss or losses to be debited. Expenses or losses or loss to be debited. Income and gains to be credited. So for real account I am giving more example. For real account, those are real we can maintain year after year, we can touch, we can feel, we can maintain, that is cash account, bank account, machinery account, building account, land account, plant and machinery, plant account, etc. are the example of the real account. Now nominal account, expenses and loss are to be debited, income are to be debited, and in journal. So we are doing now the some or giving some example of nominal account. Salary paid, salary paid, paid to staff, rupees or terms, rupees 1,25,000. So what will be the entry? Salary. Salary is a nominal account. For the salary, for the account, for the year is to be closed, it is to be transferred to either, it is to be transferred to PL account. The balance is not to be carried forward for the next year, because it is a nominal account. End of the year it is to be closed. So salary account, salary is a account is debit, and real account, that is cash. Pay salary paid, nothing is mentioned, cash we are paying to staff, cash account, that is 1,25,000 debit and 1,25,000 credit. Under golden rule we are giving explanation. Nominal expenses, that is salary, salary account debit, and cash goes out under real account. So to cash, salary is a nominal account and cash is a real account. Now I am giving another example for this, giving another example, that is purchase goods for cash, purchase goods for cash for your office or your factory. So purchase goods for, purchase goods for cash rupees, or by purchase goods by check rupees 25,000. What will be the entry? Purchase. Purchase. What is purchase account? Purchased goods by check rupees 25,000. Purchase is a nominal account. It is a expenses for the business. So what will be the entry? Then purchase account debit to bank account. Purchase is expenses under nominal account debit, and bank is a real account. That means amounting from this we are making payment, that means cash or bank balance goes out or reducing. So purchase account debit to bank account. The purchase is another expenses, example of expenses, and those are covered under nominal account. Now I am giving another example for purchase account, that is sales. What is the purpose of the business? Purchase of and sales. You can purchase goods and you can sell the goods, the finished goods or your product. The purchase and sales, it may be manufacturing organization or servicing organization. Activity for this organization is purchase and sales and to earn profit. So goods sold, that is your product. Goods sold for cash rupees 75,000. Then it is, if we sell goods, the goods sales is a income and we are getting money, cash. Then what comes in real account? That is cash account, debit, that is 75,000. 2. Sales is a income, 75,000. Now I am explaining through golden rule under nominal account, sales covers under income, nominal account, cash under real account. We are receiving cash. What comes in? What comes in means we are getting cash. So cash account debit and we are earning, that is sales. What is sales? Income or gains to credit. That means first portion is debit and with 2 indicating credit. With 2 credit, that is cash is a real account and sales is nominal account. Now we are paying office rent. Paid office rent by check. Paid office rent by check. Rupees 15,000 for the month July. So office rent, or you can write rent also. Rent account or office rent account. It is expenses. The rent account debit to cash, to bank. We are issuing check to the landlord. The rent account debit, it is expenses, that is rent. And our bank balance is goes down or reducing, that is under golden rule, it is to be credited. So rent account debit 15,000 and bank it is 15,000. That is rent account debit to bank account. Now I am mentioning some nominal account. Nominal account is now example of nominal account: expenses and losses of this and income. Under both expenses is purchase, it is the main purchase account. Then income, sales, then salary, expenses, wages, account expenses. Then we are getting commission, income, commission received, account. We are paying commission, commission expenses, paid account. Now interest, we are receiving interest from bank, interest, received account. We are paying interest to bank or on loan, the interest, paid account. Now I am giving a lot of example. I have given a lot of example with explanation related to golden rule. Explain the personal account, then impersonal account. Mainly there are 3 types of account. One is personal, third is nominal account. In the next class I will explain or do the journal, format of journal, and all transaction with a narration is to be recorded in the journal. All are requested to join the next class also, so that you will get, all of you will get a clear idea about the journal and narrations. And it is the next work, next class work I have already given. Thanks all of you for joining the class.